You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Servati.
Hello, everyone, and welcome to the Predictions episode of the Big Cast. My name is John Best. I am the CEO of Best Innovation Group, and joined with me today is my partner in crime, Glenn Servati, and two of our favorite people in the world, our special guests, John Janklius and Ann Legg. Hi, everyone.
Hey, everybody.
Happy New Year, everyone.
Happy New Year.
First episode of the year, our tradition.
First episode of the year, and it's predictions. And yeah, even a broken clock is right twice a day, you know? So except for a digital one. No, even a digital, well, if a digital one says AM or PM,
unless it's just
it's probably only right once a day. Yeah. If it's in military time, it's also not right twice a day.
Oh, you're no fun.
Really, that saying is stupid. Let's just go with that. Anyways, let's get on with it. So this is the episode where, well, first I think we review how terribly we did last year.
And this year we were not terrible. It's kind of amazing because it was a crazy year. But when I went back, and we'll post a link to last year's show, but we were shockingly accurate. And particularly, and we'll get to this at the end, but John, we always do the Bitcoin prediction. John Best, you nailed that one, which is, especially given the year Bitcoin has, is pretty surprising.
Yeah.
But, a couple other things we talked about real quickly. And we'll put a blog post on this, kind of recapping it, but you can hold us to account by listening to last year's episode. I had predicted there would not be a recession. Inflation would slow enough to the point that it wouldn't be a big issue by the second half of the year. And I'm going to pat myself on the back. I'm not going to overly pat myself on the back, but I think we got that one.
Nice one.
We all forecast kind of a resurgence or a continued increase in credit union fintech collaboration. And I think that clearly happened, seeing lots of signs of that.
Not just collaboration, but I think we talked about the compression, I guess, I think we were hot off the heels of FDR and Fiserv, and we talked about the market and the idea that like PSU and co-op. I don't know if we predicted that exactly, but I think it would fall into that category.
Yeah, that's right. No, that's one of those or America's credit unions, CUNA and NAFCU. Didn't see that one either, but
consolidation in the marketplace. We talked right about that.
Did. And John Janklius and Ann, you both really spoke about small business holding up better, given how well they learned to really pivot quickly and fine-tune their operations during the pandemic. And to the extent that there was slowdowns last year, it tended to be at larger organizations. So I think we hit that one as well.
Woohoo!
And then the one that I thought was interesting, which really shocked me when I went back and listened to it, because I think the biggest surprise of last year was probably the crisis with Silicon Valley Bank and a lot of major liquidity and bank failures and whatnot. I would give us a surprising near miss on that one. And John, you specifically talked about, again, John Janklius, competition for deposits heating up, liquidity being, and you specifically said, you thought that was really going to become a concern in the second half of the year. Now, having said that, and we didn't say anything about bank failures, and it happened a lot quicker than the second half of the year. It was happening in early March, but the fact that we actually had that on the radar is, I think, pretty significant.
I mean, he's John Janklius. What do you want?
About this, how social media is the caught fire right during that and really accelerated the problem. That to me is, I didn't see that one coming. That aspect of that, wow.
Right.
It was totally different than any other bank failures. It wasn't asset based. It was purely deposit based.
Well, and cost of funds, liquidity, those are all things John talked about. I specifically remember that cost of funds being the biggest one, because I guess, and in my time of the blessing that I've had to know John and being serious about that, I learned like how incredibly business savvy he is when he was at Partners, just watching him, steer that organization through some tough times with Disney and everything. So
that's
very
generous.
impressive.
Thanks, John. Thanks. Yeah,
no, it's the truth. But
so enough rear view mirror. Why don't we get on to where we see things going for 2024? Who wants to kick us off?
I would gladly do it. And I'm going to do it with something that's really not that exciting, yet could be. And that's talking about the Fed. I know we've been talking way too much about the Fed, but here's where I want to go with this. The Fed's been waiting for labor market, and we got the JOLTS report, and it was boring for the first time. And I can't tell you how fabulous boring is. So looking at that and thinking obviously where we're going with rates, I'm going to forecast that, first of all, we're going to finally see that the labor market for credit unions, which has been such a wackadoodle experience for them this year, is going to hopefully begin to taper. I'm not going to say it's going to get better, but it should settle. With that, though, I think we're finally going to see some rates that are going to hold steady. Gosh, I'd love to predict that it's going to go down. By what? If I could do that, I would be on an island with a drinky that has an umbrella in it. But I'm going to say that this year, I love to hope that labor market begins to settle, which will allow us to have rates that should be another boring settlement. And hopefully, fingers crossed, it'll decrease.
And that's another one that kind of speaks to last year, where we very specifically said, man, do we crave boredom? And especially when it comes to finances, that's a big one. I agree with you. And I had kind of written down maybe a slightly different spin to it, is that the Fed follows through on what they said, which is that, we're going to pretty much hold where we are and maybe start seeing some declines in the second half of the year. And unfortunately, I think that the market's gotten a little bit too, I'm talking about the stock market, has gotten a little bit too excited thinking that's going to happen even sooner. So the fact that the Fed does what they said they were going to do may wind up disappointing them. But I totally agree with you. Steady rates, certainly no worse. And I think in general, we know how to work with that now. So I think that's a good thing.
Yep. So I'll make a prediction that kind of impacts the economy a little bit here. Trump wins the nomination, but Biden wins the election.
Ooh, way to go there. Way to go there.
Okay. I think that's the way it's gonna fall out for us. That's my bet.
That's an important concept, because as I was writing my predictions, one of the things that I was very, very cognizant of was that this is an election year, and it will affect the price of Bitcoin. So I'll talk about that. So I definitely am going to have like some predictions that are they're going to hinge on who wins the election. And so I hope that's okay, because I would make I can't make a prediction on the election. I hope Biden wins. I would, there are other even Republican candidates that I wouldn't mind beyond Trump, but I can't stomach Trump. So, but and I would pick a Republican candidate possibly over Biden if there was a good one. But politics aside, that election year is going to make things volatile in the finance space. And so I think you can't walk away from that.
Volatile on one standpoint, but that kind of gets into one of my things I was going to mention, is the whole notion of regulation. Both the regulators and the legislators looking at passing new laws like the Credit Card Competition Act. And I think, again, the fact that we're in the middle of an election cycle is going to gum things up. So it's going to be harder to get those kind of things done, specifically the regulatory environment around generative AI and ChatGPT, which of course has become such a hot topic. And I think what we're going to see is that at the federal level, things are going to be ground to a halt to some extent. The states have gotten pretty aggressive at doing it. And then you run into that really complicated situation where the players have to figure out how to deal with 50 different rules by state rather than a federal level regulation. And you're seeing already, kind of a resurgence of, attempts at self-policing by the industry itself. So I think all of that's going to come into play this year. I'm not saying nothing will happen, but it's going to be kind of a slow slog, at least at the national level.
And I'd love to definitely circle back on AI, but I want to dovetail on regulation in the fact that we're going to see more technology, reg tech. And please let this be the year where we're able to get that to be productivity and maybe help a little bit with the slogging. But my concern about reg tech is it's going to also get impacted by all the other legislation and concern and, bogged down by the points you just made, Glenn.
It's interesting. It's kind of a glass half full, half empty thing. The more regulation and more complex it gets, the more you need reg tech. And the reg tech people have an even bigger challenge of figuring out how to make it effective.
Exactly.
So that kind of leads me to my first prediction, which I'll throw out here. And it really kind of is interesting because it dovetails pretty easily into what Ann just said, which is AI is now rocket fuel for every industry. And let me explain. A programmer who could code, a programmer or a group of programmers that could code something now, if they have an AI assistant that might have taken them 2 weeks, a month to finish a project, that could potentially be done now in, I want to say, more, maybe even that could be cut in half. It could be a week, it could be whatever. And so when you think about that as it relates to a whole lot of other technologies, and I'll throw a couple out. The metaverse. I would also throw blockchain in there. That's an important concept that goes with it. I would throw.
Yeah.
What's that?
Amazon's Q.
Yeah, that's an example of what's coming. There's the blockchain. There's some other really big pieces here that I think that are going to all be affected by this. So what's happening is, and John, you being the CEO of Nimbus, you have to be able to look at your own programmers and go, okay, you know, like, are we already seeing some of those gains, and how do we lean into that? But let's talk about that, about why this might, spark some economic growth for us. And I think that the way it's going to spark economic growth is by adding AI either into the process of building or using or making or designing all of these areas. When you look at them, we sort of have this toolkit that now exponentially pushes pretty much every industry. So, for example, imagine air conditioners and air conditioning industry that now has an AI with a capability of sort of, reasoning and doing some of these things. Imagine, complex financial instruments being explained by that. Imagine engineers who take forever to sort of figure out, it takes a while to figure out things. Space travel, another example. All of those things are going to be all sort of, all going to be sort of a big thing. There was a great TED talk from Kathy Wood. Do you guys know who Kathy Wood is? Yeah, she's I think the CEO of ARK Investment. And, she really talks about how it really hits these technologies, autonomous driving, the electric car. Now that we have this innovation with this, it's just going to take everything. And I'll give you some what I think are concrete examples. The metaverse, which kind of just fell by the wayside because of AI this year. But once you add AI to the metaverse, things get really interesting really quick. So I see that as being an important concept. I think we're going to see other areas where AI creates straightaways in the engineering, and then adding these other technologies in. So, which will lead me to my bold prediction, which I'll save for the end, but my bold prediction again. But yeah, I think AI kind of is going to take, and it's going to spawn economic growth. It's going to be highly disruptive. Now, all of that goes back to what Ann just said. And what Ann said was, what'd you call it? Reg tech, right?
Yeah.
So a lot of reg tech will be based on AI. And you mentioned that. The challenge with that is going to be how well we choose to develop and deploy it. How well we address the societal challenges, prioritizing, human well-being, those sorts of things. And that is all going to be based on what happens in the election and the government. So here's what I think. I think Biden stays in place. He's going to continue to have his team keep an eye on this and put out these various things that Glenn and I have talked about over previous podcasts, these guidelines and executive orders that we've seen. And I do think there's a chance. Obviously, were it that Trump were getting in place, I think there would be less of that until it started harming anything with regard to their party and sort of their approach. Like, for example, if somehow AI were to have an impact on abortion, say, as a society issue, which is kind of what John talked about last year with regard to social media, then it could go the other way. So that's one of those that, but for now, since we have till November, I know that we're going to see a gold rush for this, and we're going to see a landslide of new products and services that all have AI in them, as John mentioned, Amazon Q, and so forth and so on. So I just think it's sort of rocket fuel for everything else.
If I
I have
go ahead, John. Go ahead.
I was just gonna say I have so much to say on this, but what I'd love to hear is John Jankley's. I'd love to hear your perspective first, because I
Yeah.
know, yeah.
Yeah, so I agree with all this conversation where this is flowing, and it makes me want to make a prediction, and sadly so, that we're going to see a huge failure by a regulator to have their arms around something, and it's going to make Silicon look silly,
Mm-hmm.
as far as like in the news, a threat to a financial institution. But I think it comes from something in my mind that's very fundamental, in that financial services, we all used to be in our vertical, right, doing things, and that now we're doing things more like an ecosystem, but the regulators not kept up with these ecosystems that are forming and growing, and they're
Mm-hmm.
overlapping. Like an example of this would be, well, think of a vertical like the car business, right? Like
Mm-hmm.
Mercedes-Benz, but they're putting payments embedded in their cars now, right? To pay for fuel and insurance. That's what I mean by verticals that are colliding together. And the regulators, I don't think they're going to be able to keep up with this in the initial part, with this experimentation going so fast. And we're going to see some pretty big bad experiments happen, and the regulator is going to be left behind going, how in the heck do I get my arms around this? And maybe they're going to have to think about reorganizing regulation out of these verticals into something more that matches the ecosystem. So imagine an ecosystem of regulators helping and folding over one another in order to protect, consumers. So, and that's kind of really out there. It's an early thought for me, but it's like they need to match the operating environment, and they're not. They're set up as verticals, but we're set up as an ecosystem. That's not going to work. So
I'm hearing Justice League of regulation and fintech. That's what I'm hearing. We all need to get together with our beautiful talents in a room and start figuring out how do we make this to the point, not only is it operational savvy, but it's got a member service / consumer impact piece. And then when you look back at what so much has been going on in the industry and in the marketplace, we're talking about empowering financial well-being. And if we can get what you said, the ecosystem to be an advantage, that can help empowering financial well-being, because we've got a lot of stuff that's going to come across this year for sure. I'm going to pivot slightly, and I'm going to definitely come back to AI. But when we think about all the buy now, pay later that has just skyrocketed, we're going to see a lot of financial risk. We're going to see a lot of financial issues if people can't continue to make the payments on higher rates because rates are staying stable. But where we could see some opportunity, to your point, everyone, is how could we take the data we know and how can we do early warning systems and predict and help our members and help our users, both internal and external, to have better financial lives, right? That's the part where AI can come in. Again, we have to worry about bias, and we have to make sure we have definitely some bumpers around that. But when you think about the power of AI, think about it in the terms of productivity and the terms of financial well-being, member experience. A super easy example of this is how credit unions can now take and not only just manage something as simple as like their email, which is, hey, I might get 4,000 emails in a day. Somebody help me summarize. But also think about taking the knowledge base you have on member service, right? All the operations, all of the regulations, all the different things that are turning around at a credit union, and being able to put that in a knowledge base and then let the knowledge base learn from itself. So now you have all your branches and all your outlets and all of your call centers and all of your web experience all talking the same language. And it will remove inconsistency, it improves service, it's going to improve the overall experience, and ideally will help with financial well-being.
It's interesting because I agree with everything I'm hearing, but I'm going to put a slightly different spin on it.
Oh, good.
And I know how John loves to twist my words, so I can't wait to hear how he does it this time. But in terms of generative AI, which of course I think was inevitable that we were going to really kind of dig in on that piece, I agree that there's all kinds of opportunity, and particularly behind the scenes on a consumer-facing side. I think that the engineering aspects are going to continue full steam ahead. I think I totally agree with John Jankley that the regulators are going to have a really hard time keeping up. That would have been difficult already. And again, in an election year, it makes it even that much more difficult. I think we're already seeing that. But at the same time, we always find that these things, and despite the fact that Gen AI is going so fast, I think that these things take a little bit longer than we typically expect them to. And especially when, John, when you talk about, big productivity improvements and things like that, I'm not sure we're going to see. I think we'll see new product introductions. I'm not sure we're going to see that quite as concretely during 2024. In fact, I kind of keep thinking about the hype cycle, the whole Gartner thing. I kind of think we're going to wind up, going into coming off the peak of inflated expectations. If you think of where we are now, people are already kind of creeped out. Some people are about Gen AI. I think that more of the negatives are going to kind of keep coming out for a while, and you hear that drumbeat of the bad things that can happen. That's not going to slow down the real work, the way we've always talked about that with blockchain too. I mean, it might be the public perception and the headlines, but behind the scenes, there's going to be people just continuing to do stuff. But I do think that we may be falling off off the peak of expectations and moving down from there.
See, I think we're not even there yet. I think what's going to come out this year, particularly from OpenAI with GPT-5, is going to far exceed anything anyone had ever thought it could do. It's going to be, it's going to create all new need for regulations. It's going to create an all new need for just all kinds of stuff.
Have they put a date on that? When is 5 supposed to come out? Do we know?
He said it was in testing in the last that interview he did with Hard Fork. So I think he said first quarter.
Wow, that early.
We'll know, yeah, because have you seen OpenAI slowing down at all? I mean, they have released more stuff and more features in 1 year than almost any other system over that time. So, but I don't want to rain on your sad little parade. I can hear the black parade that you're leading. I picture it like one of those. Actually, I picture it more like you said, drumbeat. I picture you think AI is like Jumanji. Like, don't play the game. If you do, you're going to be hunted till you're dead or sucked into a video game or whatever.
Okay, but I'm going to jump. Go ahead.
I was going to jump too. Here's my jump. This is probably going to step on Glenn, but I'm only going to give a small prediction. I think FedNow catches freaking fire, dude. I think FedNow is the secret sauce.
Oh,
I
wouldn't that be lovely?
think people have been waiting for FedNow their whole life. I was talking to a small business entrepreneur this morning, and she was saying, "Oh yeah, I got to put it through this and pay the credit card rates." And when they realize that they can use FedNow to get paid, it's going to be game on. And if you don't have it, you're going to need it. FedNow, FedNow, FedNow. That's what I'm saying. I got a shirt. Go ahead, Joe.
Here we go.
Discuss amongst yourselves.
Here we go again, because I mean, here I'm playing the passionate, intense moderate again. I absolutely think the FedNow is on the right trail, as is RTP. I think instant payments is clearly, coming up the road. We can see it clearly. I don't think that the volumes that you're going to see in 2024 are going to knock anybody's socks off. I think it's another year of really setting the foundation for where we're going. And I think it'll be much clearer, and I think that there will be a very promising future by the end of 2024. But I mean, the way I hear you're saying it, I think, people are going to be making instant payments left and right, by the third quarter. I don't think that's going to happen.
I'm adding in my idea that AI is going to accelerate this. So here is what I think the challenge is. Here's where I think your brain is, and here's where my brain is.
You stepping on my brain.
But I do adore your brain. You know that. So I think that, yes, in a previous world where we were operating by the same physics has changed in the development world. That's my overarching sort of prediction is the physics has changed. Gravity is not the same as it was. And so if AI is going to accelerate all these things, it'll certainly accelerate the adoption of FedNow. And let me explain just tactically why. FedNow, one of the challenges for credit union systems, except for probably Mr. Chanklius's, because I'm assuming it already does this because it's a modern system, is that they all have difficulty supporting this idea of real time. You got to be constantly polling the FedNow, looking for these payments and then immediately doing it. It's not a world that they've lived in, even with, because the network does that for them, Visa, those sorts of things. So I think a lot of the assumptions around the deployment of this are based on the time it's going to take to solve that problem. And what I'm saying is AI will solve that problem, not as a product. You're not going to use AI to make those determinations. It's just going to expedite the coding. It's going to expedite the implementation on all sides. If someone like you and I can figure this out, and okay, I'll just say me, then we know that Mike Cook is scheming somewhere at Walmart. Yeah, I mean, he tried to remove Visa from all of Canada once, and he's just waiting. So if he thinks this will do it, it's only going to take one big retailer to change the game forever.
Okay, I want to. Oh, go ahead, John.
No, go ahead, Ann. Please go ahead.
I was just going to say.
This is why you're wrong, Glenn. Sorry.
No, I wanted to. You. What I love about this is how we all have such slightly different perspectives, which makes this so fruitious. But I was thinking about the payments, I was thinking about AI, and I'm thinking about how, and reg tech, and it's all coming together. And what we're talking about, though, without a doubt, is next year is going to be the year of you've got more data than you know what to do with. If you've got your information on payments, that is such a gold mine. If you can figure out how to take that payment information and very quickly understand the insights in there, you've got action. And if you've got action, you've got impact. And all of what we're talking about comes back to that. So I would love to see us a year from now seeing that there's been impact.
But I love that point, Ann, but I'll even go a step further. Having the data has been great. We've always had the data. The challenge has been that last inch. And so I'll give you an example. We have the data. We find so right now, today, there are credit unions whose bill pay. You could walk right in there. You could type in your Citibank Visa and start paying it through the bill pay. The credit union doesn't question it. Nothing happens from it. Only a very few credit unions that I even know of will find that Citibank and go, hey, we should do a balance transfer. And only after the fact, only after I've been paying it for a while. The reason is that it's hard to build these campaigns based on that data because the last inch has always been so difficult. So, for example, I want to give you a great rate and I want to tie it to Fed now. If you'll bring in $50,000, that's a nod to my friend John Jankulis about liquidity, via Fed now, and I can get it immediately. I'm going to give you this excellent rate on a CD or whatever, so I can build up my my liquidity, reduce my cost of funds, and so forth. So, but the problem has been, okay, I'll take the deal. Now I'm just sent off to a system, and I don't want to name any names, but one of them rhymes with Badiddy and Bink. Those kinds of things where it has no concept of the campaign. So it's almost like, hey, I've got this great deal for you in a car. Let me tell you all about it. And now you go down to the dealership and try to explain it to the salesman and see if you can get the deal. And that's going to go away because the last inch can all be handled by AI. And I already seen people working on it. So I agree with Ann. I just think there's another step that even accelerates it that much more.
I agree. And what's super fun about that is you export your payment data into Excel and you give it to our friend Chat and say, what do you see? Then you go in and you say, hey, Chat, I'd like to put together some sort of a sales campaign. What would be the messages? What would it look like? Now, on base of the insights, how do I do that? And within hours, you have something that's doable as opposed to weeks and months. Now, to your point, is connecting up
that. Right. Yeah, that's the expedited thing. It's like that old Star Trek thing. Remember, he's on the planet and he goes, if weeks were days and days were months or whatever they said. That's where we are.
Yeah, exactly. And I just want us as an industry to be able to get in there and embrace it in the best way that we can.
I was not going to mention Section 1033 and the whole open banking data sharing thing because it's so geeky, but just tie in just very quickly, just kind of to close out your point, Dan, the data thing, the knowing what to do with data, absolutely agree. And I think AI definitely can help with that. The way you're describing it is primarily dealing with it internally within the credit union. We do have this whole new, horizon out there of other people getting access to that data too. Again, the rulemaking going on, the comment period just closed. These things slog along slowly. So that's probably not going to be a major 2024 impact, but the battle over how that's going to look is going to be a pretty big story in 2024. John Jay, we're shutting you down here. Where do you stand on all this?
Oh, I just think what a great business to be in consulting right now, right?
Yeah.
how to capture this opportunity, because there's always been data and there's always been, the ability to present it. But when it gets to the cultures that actually can run and do those, there's a place there for kind of the coaching, consulting, that kind of really do that last mile in order to bring the value to the member. And I always wonder about that too. Actually delivering the value, actually making it happen somewhere between the technology and the people. There's some kind of behavioral interface that needs to happen. And you do such a great job of that, and just the importance of that. Don't forget that in your equation in order to yield the value that you want. You're going to need that for sure.
John, to your point, that is return on data.
Yeah.
Yeah.
ROD.
Yep. ROD.
I agree with you, Ann, too, that it's great that I wouldn't say we have totally different perspectives. We come at it from the same foundation, and then we kind of take it in different directions. I've got another one of those kind of yes ands to what John was saying. I agree that AI can and will move the whole notion of instant payments along faster. But I will add to that we, yes, ChatGPT is unprecedented in how quickly it scaled, both in terms of its development, but also in how quickly it reached 100 million users, et cetera, et cetera. It's a little bit different when you're talking about payments because you have a two-sided market. And you got to get people on both sides, the buyers and the sellers, the payors and the payees, both enabled before the transaction can actually take place. And you can't call somebody on the telephone unless the person on their side's got a phone to take the call. So I think that's still going to slow us. I want to say slow us down. It's just going to keep us from thinking that, by the end of 2024, everyone's rocking and rolling. I think we'll have, the numbers I've seen. I think there's 330 FIs currently on FedNow. The number is a little bit higher than that. I think it's in the 400s for RTP. Those numbers are going to go up dramatically. They both went up dramatically in the last year, and they continue to go up. But that's the piece that you got to get the foundation in place.
So then I'm going to throw this at John Janklius, because he seems like the kind of guy that would know this better than I would. But I wonder if anyone's done a study, and I think they probably have, on how the invention of power tools impacted construction and overall society. So before, you wanted to build a barn, you got to get all your friends together from the neighborhood. You're hammering nails in with old hammers and penny nails. And then all of a sudden somebody comes along with this nail gun, and you can just tick, 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 tick. And then, but it's connected to a big compressor, and not everybody has one. That then you see where I'm going with this. I feel like we're in the early days of these power tools and construction sites, and I think there were cost implications. I think there was increased efficiency and productivity, and I got to think that, I wonder what the construction was like, how long it took to build a house in sort of pre-power tools, and how long it takes to build a house now. Because I think, I guess I see this as sort of fundamental construction work, like nails and glue and stuff. But instead of you just invented the nail gun. You invented, I don't know, the robot that has the nail gun on top of it. That's how powerful the AI tools are. And it improves precision and quality, all kinds of stuff. But go ahead, John.
So John, so Chat GPT-5, there's an estimate out there that says 500,000 jobs lost in 2024 already is going to be coming, right? So the new technology is going to come, but I go to, how are you going to pay for it? And one of the strategies is abandonment. What are you going to stop doing in order to pay for this new technology? And there's low-hanging fruit out there. If you're doing instant issue cards in your branches, stop it. Folks are more than happy to use a payment system in the wallet, and then you can mail the card later. But all that stock inventory you had at the branch, all staff time being used for that, you need to stop that so that you can invest in these future things. So my thing about fueling the future of these new tools for construction, in your analogy, is what are you going to stop doing? You got to put down the old hammer in order to invest in the new, air gun that you're talking about. So, there's an exercise that can be done in laddering when we're going to roll out the old stuff in favor of the new, rather than layering it on, because becoming more efficient is just king right now. You've got to do that with margins collapsing. So what are you going to stop doing in 2024? And I gave you one example where there's some dollars there to go get.
What about the IVR? I'd like to lead a campaign to turn off all VRUs and IVRs. If you would like me to come to your credit union, and I know it's going to be hard. I know you don't want to do this. I get it. It's a machine. It's been with you a lot of years. It's your friend. But when I put my last dog down, just recently I had to go to the vet and they put me in the room, and it was the room where I put the dog down, and I hated that. And then the dog that just recently passed with us, and she was 16, she was a great dog. We had somebody come to the house and we sat together and we put her down and she had a last meal, and it was just a beautiful thing. I will do that for your IVR or your VRU. You just call me. I'll help you.
Oh, that's great. And give me the ashes in a box.
I also will fight all of the staff that tells you that you need it. I'll work with them, and yeah, I'll I'll just come. We'll have a ceremony. Glenn will come. He'll play the bagpipes. He can play Amazing Grace, and we'll just shut that bad boy down, and we'll take it out of there so you don't have to look at it. We'll haul it. We'll do all the work. It's a service we offer.
Yeah, it's interesting. I don't see anybody getting so aggressive. I'm saying not that I don't predict that they will, but to date, I haven't seen people aggressive enough to literally shut these things off. But I've noticed myself, when I call the New York Times these days, I'm gonna.
And you do that a lot, right?
Well,
Every
I'm
day
gonna.
you're like, I'm calling these jerks to give them a piece of my mind.
I'm going to out myself as still getting the print edition here. So
Okay.
I'm a paper guy, and when I call to put it on suspension because I'm leaving town or whatever, the recording, the VRU, which is the way I've always done it, they literally kind of go, "Hey, loser, you can do this faster online." I mean, it's like they'll still do it, but they almost begrudgingly say, our customers tell us it's easier to do if you do the damn thing on the internet. So they haven't shut it off, but they're doing their best to move things. I just went to the bank earlier this week. I deposited a check. It's a little bit larger than I'm allowed to do for mobile deposit.
Were the pens still chained to the desk?
I have a hard time finding pens. You have they wouldn't do that because that would violate germs.
I don't know who's stealing
you
the
got
pens.
the clean pens and the dirty pens bin now.
I just went to a credit union here in the Springs that still had the pens chained to the desk. It's an old branch, to be fair.
But I brought in the check, and this morning I had an email saying, "Hey, thanks for bringing in your check. Have you thought about using direct mobile deposit capture?" I'm like, see, they're again trying to move, which is interesting. They're trying to move me out of the branch.
Yeah, but they probably looked at you and went, probably not, right? Let me see your phone. And you showed them the flip phone.
On the other hand, I mean, I'm like, okay, that's a failure of knowing your customer because I would have done it, but you haven't allowed me to do a check of that size. So
yeah, it's that kind of dysfunction that creates this idea that the organization doesn't know who you are. And in 2024, everybody expects that. They don't expect you to not know what's going on inside your system. And so that kind of dysfunction just sends a message to consumers that not only don't we care, but we're not paying attention. And that is, when it comes to money, that's the number one thing you want, is whoever's looking after it for you, you want them paying attention. And it just sends a message that we're not, I think.
Should we do a lightning round?
Let's do the lightning round, and I'll go first. So there will be a massive hack in 2024. We're talking like a whole city loses power, something bad, that's AI powered in 2024. And it will make the news. It'll be a terrible problem, and it'll kick off a big issue.
I had one a little bit like that we had that event that took about 60 credit unions offline just in the last few months. I think that whoever the ransomware folks who attack those will go further up market and do it with some bigger folks, and it'll become a bigger issue. So I'm kind of thinking along the same lines.
I think differently. I think they will expand horizontally, because up market is harder. It's easier to in this case, it'll be easier to catch 1,000 rabbits than to wrestle down one elephant.
So what you're saying is they'll go to a small town electrical grid or something like that.
Yeah, because they can use the AI to round up more rabbits than they could ever get out of one elephant.
Interesting.
Okay, I'm going to go back to our good friend AI, and I'm going to predict that the industry is definitely going to use it for prioritizing customer experience. They're going to jump on chatbots. They're going to jump on 24/7 support from a base level, and we're going to see an increase in that.
And I'm going to say deal flow among fintechs returns, and because it was down 26% this year, and deal flow is going to come back. The valuations aren't going to be what they were prior, but not 20, times, maybe 10 times, but deal flow starts up again on the exit of fintechs.
I agree with that one. And I'm just going to kind of double back to one of the things you said. I don't know what the study was where you said 500,000 jobs lost to Gen AI in 2024. It's almost impossible to measure those things, but I'd be willing to actually bet somebody that does not happen. I think that, Gen AI is going to create productivity. We always get so nervous about the jobs that are going to be lost, but it's also the jobs that are redefined. But it's that whole Bill Gates thing that, we overestimate how quickly something's going to happen, but we underestimate the extent of what's going to happen eventually. I just don't see that happening in 2024. And if it does, unless, someone's going to claim that, the market, we added jobs overall or we stayed flat and otherwise we would have grown by 500,000 or something like that, it would be hard to ever assess that anyway.
I'm with you on that, Glenn. Yeah. When I read that, I was like, that's startling.
Yeah.
Wow.
Well, it goes back to that whole point of nimble and innovation, right? Agility. So if I'm going to be more productive, that means I have more time in my day. So what else am I going to be able to do? And does that mean I can step in and fractionally be a different part in my credit union, some sort of project I've always wanted to get experience in? It's a whole new way of looking at labor and talent and management and creating new experiences and pathways in a credit union where if you've got more time, how else can you use it and with whom?
Yeah. Bitcoin. We got
Bitcoin.
Yeah. So what was my prediction last year? It must have been 43,000.
Let me recap. I mean, I went back and again, we'll have the link out there so people can hear it for themselves. John Janklius was the most, and just for perspective, I think we were sitting last year when we were recording at about the 16,000 level, 15, 16. John thought it had more to fall. He thought it might go as low as about 12. I had it sitting at about, I'm looking at my notes. I said 17.5, which I actually thought would be a pretty good result if things held. And I think Ann was someplace between the two of those.
Mm-hmm.
And then we patched in John, and he thought that, well, first piece of it, he had a little bit off. That he said that it was going to fall further, might even fall as far as 5,000. In reality, it never went down below its January 1 number last year. But John said that it was going to get as high as 45,000. And it ended the year, it made it to 44 during the year. It closed on December 31st at 42. And lo and behold, it's gotten to 45 already. So JV, not only do you win, but I think you get a gold star for just how close you came in a very unusual year.
Nailed it.
Yep. Yeah. Nailed it.
Well, it's interesting because what I was trying to take into account was kind of the growth dynamics of the crypto industry. And I knew that crash was going to continue to reverberate, but I know it's like, I take it back to the Napster thing. The concept made sense. Nobody wants to buy albums, although I do miss them. The people want to buy individual songs but they didn't want to steal them. They wanted to pay for them, and somebody had to figure out how to pay for them. I think the regulatory involved, and we're shaking out all the bad guys, FTX being one of them, Sam Bankman-Friedman, whatever his name is, Sam Bankfraud, I guess is his name. And now the CEO of Binance, there's just been a lot with that. So in my prediction, I'm going to have to do it in two ways. So here it is. If Biden wins, I believe it will close out at somewhere around 60 to 65,000. If Trump wins, you will see fearful people running to it, and it will close out at somewhere around 80 to 85,000.
And based on the way you've said that, you expect a lot of movement in the price in the last 2 months of the year after November 7th, 8th.
Yep. I think it stays pretty static till November. I think it climbs to maybe 50. And then depending, because it's an election year, it did this last time. In 2016, it went from 3,000 to 17,000 overnight at the end of the year because of the election. I think that we'll see more of that. I think my other prediction is we'll see several more countries as more technology comes into play to be able to use it more frequently and make it faster. not just Bitcoin, but crypto in general, like you'll see more countries that will adopt it. Like, for example, what was the country we were talking about that recently adopted the dollar as their fiat, our actual dollar, the US dollar? So I think there'll be more of that. Hey, I want to just go back to one thing here. I'm going to I put this in here. This is such a great thing, but I love what she said. This is Kathy Wood again. She says, we've never had something in technology that's never happened before. 5 innovation platforms are evolving at the same time. You have to go back to the early 1900s to see 3 platforms evolving at the same time. Do you know what the 3 platforms that were evolving at the same time was in the early 1900s?
Transportation.
That's one. Automobile. Good.
The telephone, telephony.
That's the other. And then what's the last more important one? That was the time when we were having the electricity fight between.
Oh, right.
So electricity,
AC,
the telephone,
AC.
and the automobile, right?
Nice.
So now we've got robotics, which is moving fast, energy storage, which is moving fast. That's your solar, those sorts of things, AI, blockchain. And interestingly enough, she talks about something called multi-omic sequencing, which I think is related to gene.
Yes.
Gene.
The CRISPR stuff.
Yep.
Yeah, I think there's something there that she's sort of tapping into. But all of those things are like really big, big deal. But the idea that we can, use an AI is kind of at the center of it. So, anyways, I just
We'll put the. I
found
see
that
the
so
link.
fascinating.
We'll put that link in to that TED talk she did into our show.
I just wanted to close out with that from a prediction standpoint, because I think we're in such a unique. It's a really cool time to be alive, folks. Like, I'm glad I made it this far. There was a few minutes where I was like the other day when the plane just about dropped out of the sky and my laptop hit me in the face. I thought, wow, at least I got to see some ChatGPT. Now I'll never know what 5 looks. That was my last thought. I checked on my phone. Well, actually, my phone wound up in first class because it was completely out of the blue that this thing.
You literally, you had things kind of flying in the air. Wow.
Oh yeah, it was crazy. My laptop hit me in the head, then wound up 2 seats in front of me. But fortunately, the plane was about half empty, so it wasn't that big a deal. But my phone was on the seat beside me because I had an entire exit row. So, but I did think that, like, wow, there's a lot of stuff I was really hoping to see.
So we get to, there's the outlook.
Like how to make a loan and a member at the same time. That's been a dream.
Oh, let's hope that happens.
In our lifetimes.
We got to get a couple more Bitcoin predictions before we sign off.
Okay,
John,
let's go.
man?
Oh gosh, I was so horrible last year. I'm just gonna fly right in the middle at 50. How's that?
Wait, don't you want to do the Price is Right thing and go like
over under?
Yeah.
John's already gone over, so John Janklis wins at this point with the low one. But I think
all right. Well, then
on that one.
All right. Well, then I'm gonna help John Janklis feel better. I'm gonna say that it will be 30. So you get to be right in the middle. John is high. Okay, Glenn, where are you going with it?
You and I are fairly close on this one, but again, I'm going to say that I think of this as a positive number. I think the run up that's happened recently says to me that there's just not enough steam to keep going. I totally agree the election year will keep it high, but I think I said 36, and I think that's still a very positive number when you compare the long-term trend. And I think that would still say there's a lot. And I agree with JB that depending on what happens in November, I mean, it could get pretty wild, but the markets hate uncertainty, and there's going to be plenty of uncertainty, even probably in the summer months too.
Well, that's it. That's our predictions episode. We're right here at it. I'd like to close out just by thanking all 3 of you, just for, the fact that you do this with us year after year, and you guys bring such talent and, thoughtfulness to these subjects. It's just a pleasure to talk about these things with you, and Glenn too. I mean, yeah. I'm just kidding, Glenn. But Glenn, we've got some upcoming episodes. Glenn and I are hosting a CEO thing at the GAC, so we'll be out there. So if you want to come yell at us about our predictions or congratulate us, you can find us there coming up. And let's find out where everybody can find everybody. So, and let's say somebody just like heard the brilliance that you've just brought to the table, because you really have. You always bring an incredible perspective to this. How can they find you? How do they find you?
Thank you so much, John. It's always such a pleasure. Obviously, reach out directly to me at ann@annlegthrive.com, but also go to annlegthrive.com itself. The website's chock full of all sorts of goodness, or hit me up on LinkedIn. You find me at all those wonderful places, giving you hopefully a whole lot more mind candy.
Awesome.
Mind
Mr. Jankulius, my hero. Talk to me, sir.
Sure. Thanks everybody for stretching my thinking today. I love when we get together and do this. So, but you can find me at nimbus.com.
NYMBUS, correct?
Yes, sir. Yeah, that's perfect.
Right. So not like the cloud, but a more Silicon Valley spelling of it. Or is it? No, Nimbus is NIBUS. Anyway, it says MY, and I'm going to confuse people. Go to NYMBUS. We'll put a link out. But anyways, John's so approachable. If you ever want to talk to him, I highly recommend it. Glenn?
Well, as you said, I mean, if you are happen to be coming to GAC, now hosted by America's Credit Unions as of a few days ago, NAFQ and CUNA coming together, would love to see. I think all four of us, I'm pretty sure, are going to be there in person, right?
Yep.
We'll be there.
Love, yeah. Be sure to stop by and say hi.
We should find like a bar or something, and I'll go there one night and say, hey, come by if you listen to the podcast. Glenn will buy you a drink.
That's a great idea.
First weekend in March, or just starting on the Sunday. I think it's like the 3rd or so. But anyway, yeah.
For each person that comes, you could spend up to $250 on a bar tab, and Glenn will cover it.
Find me there, or just find me at the website big-fintech.com. You can also find me via my firm 154 Advisors at LinkedIn, on X. But I love talking to the podcast listeners. So if you leave a comment for us there, I'd be happy to continue the conversation.
And you can find me at big-fintech.com. You can also just email me at jb@big-cu.com. And I just want to, also thank Glenn for finally spending the money so we didn't have to hop off this Zoom and jump back on. So already the year's starting off positive.
One of my resolutions is be less of a cheapskate. We'll see.
Yeah, you've made it about 5 days in. I'm impressed. All right, folks. And all the listeners out there, we can't thank you enough for just letting us continue to do this in the comments. I hear things from people all the time. So thank you.
Thanks, everybody. Happy New Year.
Happy New Year.
Happy New Year.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.